Hello, my name's Craig Earl, Senior Market Analyst at Oanda, and in this video we're going to talk about gold. Now, gold again has been really popular recently. We've seen some very interesting moves. At one stage it was looking very bullish. We'd broken through 1300, we even pushed as high as the 1340, 1350 range. Since then it has lost a bit of that shine though. We have seen the US dollar perform better than many expected. Again, the US dollar has been extremely resilient this year. Towards the back end of last year, a lot of people were suggesting this could be a very difficult year for the greenback, and it still may be. But in the first quarter of this year, it's shown extremely levels of resilience. Now, that may possibly be because the euro has performed much worse than people were expecting. The pound has performed worse than people were expecting because the Brexit talks have taken much longer. But still, the US dollar has continued to remain well supported, which has taken some of the edge off the gold rally. Now, since then, we have seen it pull back towards the $1,300 level. In fact, we've broken below there and tested 1280 to the downside. We've seen a little bit of a rebound off there, but 1280 remains a key level here. If we see a break back below 1280, and we are around the 1290 levels at the time of recording, then that could be a big technical support level which we see taken out, which could potentially open up and move back towards the other support levels, which we can see on here. Other support below here is around the 1260s, 1240s. Again, gold does seem to be moving in these $20 ranges at this moment in time, which is why we do have these levels being highlighted on the chart. Again, there are a number of factors which are playing into the movements in gold right now. The obvious one is the US dollar. Strong inverse correlation between the US dollar and gold because it is priced in dollars. And the fact that we have seen a resurgence in the US dollar recently is one of the things that's weighing on gold. Another thing is risk appetite. And again, that's one of the things that's made today in particular very interesting, because we have seen a drop-off in the US dollar, but gold remained relatively flat. But that's because we have seen a resurgence in risk appetite today. Equity markets are performing well, so traditional safe havens are performing less well. So I think that's acting as a bit of a drag on gold. One of the longer-term supportive factors, again, though, is the fact that we are seeing central bank support. A lot of central banks now have shown a far more dovish stance than they were a few months ago. The Federal Reserve has suggested no more rate hikes this year. The ECB has suggested no rate hikes this year as well. And other central banks as well have followed. The one outlier, of course, potentially the Bank of England if we do get a good Brexit deal. So longer term, that could be a supportive factor for gold, especially if it's accompanied by a softening US dollar, which again, many were forecasting towards the end of last year. But in the near term, there could be some headwinds for the yellow metal, which puts a lot of pressure on that 1280 level. And again, below here, 1260, 1240, then become notable potential support levels.